Good evening all, hope you're doing well. This is a continuation from yesterday, in so much as that we were fear yesterday and we're fear today. If we're in the fear phase tomorrow, that's going to be the first time that's happened since we've implemented the market sentiment summary. And that's quite old now. It's definitely a few months old now. So if we go fear back to back for 3 days in a row, that's going to be of note. All right, so we're seeing a big change on the 24-hour, and that's obviously impacting the big picture. The technical scores are dumping, and the herd has sold the USD. All right, because of that, the dollar is going to appreciate because the herd have sold. Okay, so hopefully you understand how that works. Okay, there has to be someone to take the other side of the trade. They've really shorted the dollar CAD. They've gone long AU, EU, GU, NU. But really, dollar CAD and Aussie have been, oh, and also really the Euro USD as well. They went really long, those three. So we should see, price respect that. Okay, so it'd be really unusual to see the herd get paid. It can happen, but it'd be unusual. So note the dollar, and we'll come down. Look, the VIX is really going for it as well. Indices fallen as suspected from yesterday's video. So hopefully you saw yesterday's video. Come down to Wednesday. Now that's of note, the US30. Why is it of note? It's because we're getting close to zero. If we go into positive territory, it'll tell us that it's a static sell. Is that in so much as that they heard our net positive. All right, so it's a huge deal in a sentimental perspective, okay? And that's going to be the first one to flip. If we go over into positive territory, it's going to be the first one that's happened. That's a good, probably, well, has it been a couple of years? It might be. Is that the herd have been bearish for so long. In fact, we can actually look. We'll actually see that. I don't actually know the answer to that. Let's come to the US30. So this has been going long on the S&P. When did they last flip on the US30? It feels like it's been years. It might not have been years. All right, we're going back to April, February, January, December, October. Hopefully it loads the data. Oh, look. Oh, right. Okay. So it hasn't been years, but it's been since November. So it's been 6 months. Okay. It feels like it's been years, but that's the last time you flipped. Look at the change in price after we had the static flip. 32,000 and we went to 40,000. All right. So obviously you want to be on the right side. So what you could do theoretically is wait for this to go red, then green, and then you're looking to buy. This is the QDB trade plan, but I think for us, we don't want to be looking at one instrument. We want to be looking across the other indices as well. Of course, if you're trading the US30, that's going to be fine. But I think for me, I'd rather trade the S&P. It's a little bit, I know, less volatile, and this moves hundreds of points, and so it can obviously do a lot of destruction. But you can see the price reaction. And before that, we obviously had the 2020 COVID crash, where that was the dip buying opportunity. Well, yeah, it might not load the data, but you can see the reactions every time we flip. Boom, like that. And this is the one that was causing all that skew, and it's caused our risk calc to be at all-time highs, and we were, at 37.5 SSI, which tells us that it's 37.5 people selling versus the one person buying. So this is of note. So I kind of like screwed the. That should be fine. But you can see what's happened is that they've gone long, and so price has fallen. They went long here, price fell. They went long again, we went sideways. We did admittedly go sideways on the sentiment, and they started buying, and they got punished. So we covered S&P very quickly, and probably worth watching DAX. And what I think's going to happen is going to be so boring if it happens, but it looks like we're going to get the crossover for buy. And if you note that we've made it like a channel, this is like a fake breakout. Potentially, maybe I can draw it. Yeah, don't want to do by angle. Let's see. Yeah, definitely that's gonna look. Oh, maybe it will. Yeah, so something like this, and then we've got like that sort of scenario where we could be coming down to there. It's not the greatest channels, but what probably might happen is that we're going to fall, and then they're going to get sucked into it, and then of course they're going to really short it, and it might coincide at the support, and then of course we have a technical support with the sentimental buy, so that's going to be a bit boring. But maybe, hopefully, you caught some profits on the way down. Remember, you should really be looking for buy the dip opportunities. Okay, so I think possibly setting up for a buy, and I think S&P could be as well. And it's going to be a little bit boring, but it has to. They have to avoid the wreck and ball scenario, and if they can avoid things from falling, so it doesn't look like they're selling it. In fact, they're going long. See that tick up? It's like moving a little bit. It's wiggling. So if they sell it, then this is going to be a decent buy opportunity with a stop here. And that's the QDB entry and exit system. You're waiting for the crossover, and then your stop is below the swing low or swing high. So maybe we're going to get some crossovers, but it looks like it may not on the S&P. But I think potentially for DAX it might. Gold. And Mr. Bosch is saying we're at a 200 MA, so it's off note. And the thing is that they're going long slightly. And we also had we've had stronger US yields yesterday, and the day prior, and the day prior, and the day prior. So the US Treasuries are getting bid as a safe haven, and because of that, whenever these rise, they push the dollar higher, and also dollar yen, and it should push gold down as well as a result, as a consequence. Okay, so that's how that works. So it may be under a bit of pressure fundamentally, and perhaps sentimentally as well, because we had the sell set up here, which we can draw a box. And I'm going to report on the robot, and then I guess we can just tie up, and then we can just resume and see what happens tomorrow. So there's the box there, for example. There's the sell opportunity. They'd gone long, and so therefore it created a resistance. Now, if I come to the bot, it hasn't got any trades open, and it's basically teetered a little bit. We made a little bit of profit today. It was okay, but it's not a loss, so that's okay. And ideally, what happens is that we have these more regularly. This week's been a hell of a choppy roller coaster scenario for the Euro USD, and we know that it probably should be falling because of the sentiment. If we come to maybe the half an hour, we kind of went a little bit sideways for a period of time, didn't we? Back here. Now, no doubt there'll be a ton of stops down here as well. There always will be some liquidity at the swing lows and swing highs. No, the MA is also looks like it's retreating a little bit. It may start drifting lower. There's the 200 MA on the Euro USD, and it's going to potentially gravitate lower, which may push price down as well. So it's okay. It wasn't a bad day, and what I'm going to be trying to do is spending my time developing the robot and trying to fine tune it. But it's going to be really hard if we have huge fluctuations in risk appetite, because if we suddenly go risk off or risk on, it's going to impact this, and there isn't anything that we can do, I don't think, from a QDB bot testing perspective. I don't know how we can envision the risk pump or the risk dump, unless there is something we could do, and somehow we can incorporate that somehow, knowing that we'd be risk off, so the dollar should appreciate. So perhaps if that's positive, we could be looking for buys or sells. We should be looking for sells on the Euro USD, because of that tells us that we're risk off over the last 24 hours. And because if we risk off over the last 24 hours, the dollar should appreciate. So perhaps that's something we could do. Pending that, if we encounter some losses, then we can incorporate that, perhaps that metric, where we can have a flight to safety in the dollar if we've got a positive number here. Because really what should happen is that the indices should fall and the dollar's going to get bought because it's a safe haven. So perhaps that's something that we could look at going forward in the bot. But so far it's okay. It was a win. It's not a great amount. It's not going to make us millionaires, but it is positive, and we just need more regularity to that profit. And it looks like this is fallen, but we know the reason why. Okay, so this is why the sheet comes into its own, because you just come to the risk calc, look at the shifting on the Euro USD. Right, so it would be really weird to see price go higher if the herd have gone long, and you can see what's happened. Boom, down we go. And it's just basically punishment to punishment to punishment forever. So we can add the stop loss clusters. It would be maybe a little bit late now because of the I need to allow that. Okay. Oh, okay, a bit lower than I thought at 107.95. Not quite at the round number. Perhaps they're learning, and so I think that's going to be quite likely. It's large of the two as well. Descendant MA, and a very heavily biased sentiment for more downside. And that's it. So also remember to check out FX Exercise Telegram page. They did a really good one on gold today, and that was really good. So good, well done to them. We could see that we're a seller at the big picture, and down we came, and we took out the liquidity in the process. So well done to those guys. Remember to join the FX Society Telegram group, and I'll wrap up now, and we'll see how we go tomorrow. If we are in the state of fear, that's going to be the first time that's happened for 3 days in a row, and we could well be setting up for a big wobble on the Dow Jones. So stay tuned, and I'll speak to you soon.